There's good news for credit card holders who are struggling right now. The Consumer Finance Protection Bureau finalized a rule to reduce and to cap excessive credit card late fees, which have gone haywire despite a 2010 law that was supposed to prevent these excessive fees. With credit card delinquencies surging more than 50% in 2023, this is a big break for a lot of Americans, as this move is expected to save families more than $10 billion in late fees annually. That is a lot of money.
Massive.
A lot of money. So, Brian, there's a lot to discuss here. I'll turn over the floor to you.
Okay. Well, according to the Consumer Financial Protection Bureau, more than 45 million people per year are charged late fees. 45 million. This move will reduce the typical late fee from $32 all the way down to $8.
It's a big,
massive decrease.
It is.
This will be an average savings of $220 per family per year and save about $138 per card each year.
Well, and the savings are a lot more than that when you consider cardholders paid a record $130 billion in interest and fees in 2022. And this CFPB data was pulled well before the Fed hiked the rates, because we're talking about 22 data, not 2023.
This is before the rates skyrocketed. According to Forbes Advisor's weekly credit card rates report, this week, the average credit card interest rate is 27.94%.
That is mind-blowingly crazy high.
It is, and that doesn't include the annual fees some cards have, which the average, according to NerdWallet, is $128 per card.
Oh my gosh.
Remember, 128 is just the average. Annual fees range widely, anywhere from like $7 for a no-frills card up to $700 for a premium one.
Oof.
You know, Michelle, here's how bad it really gets.
Okay.
Let's say you have one credit card with a $1,000 balance at all the averages that we just discussed.
Okay.
Your interest rate's 27.49%, which is $274.90 in interest per year. An annual fee of the average $128 increases your annual rate by 12.8%.
What?
Yes. And then let's say you had just one late fee of $32. That's an additional 3.2%. The total interest on your $1,000 balance credit card is now 43.49%, or $434.90 per year.
Holy cow.
This pisses me off. I actually taught a class in 1999 to high school finance, and these numbers are exponentially higher than they were back then. At that time, the numbers only came to 30%, which was horrible.
Yeah, this is, I don't know another word for it, but this is gross. It's no wonder people are falling behind.
Michelle, if your local bank offered you a $1,000 credit card limit and then told you up front that they were going to charge you 43.49% interest on that card, would you take it?
Hell no, I'd run.
This is what the credit card companies and the banks are doing to us today.
Wow. And all of these excessive fees were supposed to be prevented. I mentioned this in the intro. In 2010, the Federal Reserve Board of Governors voted to issue a regulation implementing the Card Act, which was made clear that banks could only charge fees that recover the bank's costs associated with a late payment. However, and here's the big kicker, the rule included an immunity provision that allowed credit card companies to sidestep accountability if they charged no more than $25 for the first late payment and $35 for subsequent late payments, with both amounts to be adjusted each year for inflation. Those amounts have ballooned to $30 and $41, even as credit card companies have moved to cheaper digital processes. Congress transferred authority for administering Card Act rules from the Fed to the CFPB.
That line says it all, and is exactly how this happened. The act had an immunity provision that allowed credit card companies to sidestep accountability. What the hell is that?
Right. And also that these amounts can be adjusted each year for inflation.
Right. Well, guess what? Here we are. Inflation's higher.
Yeah. Well, like most laws, they look good on the surface or in the headline, but the devil lives in the fine print.
Don't we always say, read that fine print?
We do. And it's not just annuities. You need to be reading
No,
your
everything,
contracts.
everything.
Everything. Wow. Okay, Brian, real quick, the example you gave about the $1,000 balance with the averages that we discussed.
Sure.
What do you recommend? I mean, when you present it like that, credit card companies are banking that we're not looking at the big picture here. We're
Well,
just
you're
looking
exactly
at our
right.
interest rate. So what do you recommend people do? Get out of debt is easier said than done. And as
Sure.
we've, the people are delinquent, people can't pay their bills right now. What do you recommend? Do people add up their numbers and then try to see if they can transfer to a different card or?
Yeah. There's several different things you can do, starting with that right there, understanding where your finances are.
Yeah.
Number one, what are you spending on a monthly basis?
Yeah.
And what can you cut back to put them funds towards paying off that debt a lot sooner?
What's the real cost of having that card?
Yeah, exactly. And can you transfer to a lower interest card, or maybe even, Michelle, go to a fixed rate loan that's guaranteed it's going to pay off in 3 years or 5 years or whatever it may be, and don't use the cards after you pay them off. It's hard. It's tough to say that right now with the inflationary environment that we're in today, with your gas, your groceries, everything going through the roof right now. It's tough for me to keep preaching that, but folks, we got to do something.
Right. At least know what you're paying.
Yeah.
It'll make your stomach turn enough that you'll probably never use a card again.
Right.
All right. We're going to drop links to all the resources that we pulled for this video so that you can go check them out for yourself and read more. Also, if you like the content of this video, help us grow this channel. Hit that like button. Don't forget to subscribe. Brian and I put out videos on the daily that help you make better financial decisions for your future. Also, do you feel like you're being gaslit right now in terms of the economy? If you feel like you took a crazy pill when you read the headlines or you listen to a talking head, you may not be as crazy as you think. We did a video on this. It's going to be in the description below and also the pinned comment. It's on economic gaslighting. And go check that out. It's an interesting video. You're not as nuts as you think you are.
That's true.
Right. All right. Well, that's it for this video, Brian. Thanks so much as always. And to everyone, thank you so much for watching.
Thanks, everyone. Have a great day.